All right, the market started off on a little bit of a down note today, and for the most of the day, kind of a quiet, small down day like in the Dow and in the Russell 2000. But if you had an oversized influence from Apple in your index, like for example the S&P 500 or the Nasdaq 100 or XLK or any index that Apple has a large percentage weighting in, then you had a very good day today. One of the biggest companies in the world, obviously. Having one of its bigger days that it's had pretty much since the correction that we had in 2022. One of the bigger up days. And again, it wasn't even an earnings now. Of course, we all know what's kind of driving that. And it was interesting that it took a day for the market to kind of rebound from the knee-jerk reaction to yesterday's announcements, their product announcements from a developing standpoint. But Apple really taking off on that knee jerk to the upside, pulling up the Qs with it. Again, it wasn't the most risk on day today. So outside of Apple, so we'll kind of break down what we're seeing and whether or not Apple's move can be can pull the market up along with it, or whether or not it's kind of an outlier and how bullish we'll actually be here. In spite of this Apple move, especially on the broader market outside of mega cap. So we're going to break all that down in today's market outlook, and we'll take a look at our trade. Our trade idea today is actually on Apple, and so we'll take a look at how to trade it now that it's made this big move. What kind of trade can we make, and can we get out of it potentially early if we meet certain goals in a very short amount of time to free up that capital and make more money elsewhere. So we'll break all that down in today's video. So let's go ahead and get started. Today is Tuesday, June the 11th, 2024. This is the Market Outlook from MarketScholars.com. My name is David Settle. Before we get going too far, I invite you to subscribe to our YouTube channel with this icon here, the red subscribe button down below. Click the thumbs up icon to like our video. Comment on anything that stood out to you today. Join our website at MarketScholars.com for free. Follow me on Twitter for more content between the videos, and join our Market Outlook Facebook group that we've created. All right, if you're following us on our blog, check out some of these other things over here on the right, including our Market Outlook live video. Come down to the bottom, click this heart, it opens up this tab, hit that like button there. Same thing here, click this thumbs up icon, it opens up this tab. Hit that like button as well. You can barely see that there. So do that. Again, the more you do that, it helps get our content out to all of our followers on those platforms. So thank you to those who do this day in and day out. Those who don't, you can do right now while you're watching with one or two really easy clicks. All right, let's start off with the S&P 500, looking at the market forecast chart like we always do. As you can see, we got another overbought cluster. In fact, this is the third cluster in the past 19 days. We don't get that very often, and in that sort of a time frame. In fact, I think the last time was the beginning of February 2017. Otherwise, we don't generally get three within, in this case, 4 weeks. In a 4-week pattern. So pretty good move today. Obviously, the momentum line jumping back up as we close near the high of the day. You can see we didn't need. I mean, it was a little bit above average, but we didn't need a big range to get that momentum line up. But we did close right at the high of the day. The close at 53.75.32. The high is 53.75.95. So only 0.6 of a point off of the high of the day. Very good strong move. That's what brought the momentum line up to high levels. Almost the 99th percentile. The near term line jumping back up into the upper reversal zone. Without, still, it's a pretty decent. We've already had one good near term run here in bullish territory. We're on a pretty good run again. And of course, the intermediate line now up to its highest level for a while, since back over here, the end of last year. The market sentiment line has turned back up. It is rising again. The S&P is just a little less than 2.5% above its 30-day moving average. So good strong move there on the S&P. The Dow Jones Industrial Average, of course, is not getting a very strong move. Still has got light green shading in the yellow line. We're below a rising moving average. That's why it's yellow. But the green shading is because we're barely rising, and we're not, we're not even above the 50th percentile. We're not in bearish territory, but we're not in bullish territory either. We are above the market sentiment. Market sentiment is rising, so there is that, right? And the near-term line is above the intermediate line, still just barely above it, but at least it's still above it. So why we're not bearish, we're not bullish, but we're not bearish either. So that's a good sign, and we would lean more towards it because of the S&P. Probably would lean more towards the bullish side of things. But here we are still with a bull tag, and we can't really necessarily get above that high to a significant degree. We're just kind of hovering around the high of that bull tag day. Bull tag day there. If you look at the NASDAQ 100, obviously it got a cluster too, and only has two, but it got a cluster as well, since that's what's really Apple today is driving the price action here post its AI announcement. And then if you look at the Russell 2000, which remember does not have Nvidia or Apple in it, and it's struggling, right? It got the bull tag. We can't bounce off of it. The intermediate line's still falling. Market sentiment's falling. They're both in neutral territory, so they're out of bullish levels and they're falling, but they're not in bearish levels yet. And the near-term line, if you notice, the near-term line really can't get going one way or the other. It's not really going in. It's just fluctuating. It's got a little bit of a bearish bias, but it's not dropping into the reversal zone. But it's definitely not getting into the upper reversal zone. So, a little bit of a bearish bias there, but not strongly bearish, not at all strongly bearish. As you can see, again, we still close closer to the high of the day than we did, the low of the day today. If you take a look at the weekly chart for the S&P 500, very good, right? We're not closing above last week's high point, but at least it's a higher Hakinyashi close. And so far is a slightly higher high for the week, so that's a good sign. The size of the candle is back above its average, so that's also a good sign for a renewed move up to the upside. Of course, your Dow Jones Industrial Average has a bearish candle still. We started off with that bearish candle 2 weeks ago, but we haven't fallen through with that. We've just kind of progressively gotten more neutral. But we're still negative. It's above its moving average. It's still negative there, and PPO is actually falling on that. If you look at the 3 green arrow charts, your S&P, your NASDAQ are giving you 3 green arrows. Your Russell is giving you 3 reds, continuing to give you 3 reds. And we did get a 1 green arrow today on the stochastics indicator, so we'll see if that goes forward into tomorrow. Your Dow Jones has 2 reds. The MACD is still red, and the stochastics has turned green, but the moving average, we're obviously still below the moving average. So, a tale of 2 different pictures here. It's indexes that don't have Nvidia in it, and the indexes that do have Nvidia. Even with Apple, it being in the Dow, it still wasn't able to help it avoid a loss on the day today. Looking at the 2-line versions of this chart, you can see the S&P above its moving averages. You have a divergence developing with the lower highs in the MACD. It is back above its moving average at least, stochastic strong levels. Of course, when you look at the diamonds, the MACD is actually still negative, still below its average, still negative. The stochastics is barely out of bearish territory, and we're just hovering right around the point of control right now on the Dow Jones. At least we're in the value area, and at least we're at the, kind of at the point of control there. If you look at IWM, remember it's been slightly bearish too. Its 8 and 17-day moving averages have crossed below the 30 now. That MACD is pretty clearly negative, and your stochastics is in bearish territory down there. If you look at the DMI, and look at some of these other oscillators here. So if you look at the DMI, you'll notice for the S&P that's not strongly bullish. We got a cluster, but your positive directional index is not above 25. Your negative is dropping pretty low. It's well below 20. So it's dropping down there. Your diamonds, you actually still have a bearish pattern. Your negative is still above the positive. The negative actually is above 25. Your positives is barely below. It's not below 20 yet. So it's not trending, though it's, again, leaning more to the bearish side. Looking at the RSI and the CCI, still very strongly bullish here for the S&P. So if I were to put this to today here, and the same thing here, they're still very bullish. So we can go right on through to the June 11th. So still bullish on both of those, above 60, well above 100. Of course, again, you look at the Dow Jones Industrial Average, that's not the case. So we did drop below 50, and we did drop below 40, and we're still below 50. So we're still kind of bearish there, and we dropped below this minus 150, and we're still below 0. So we haven't changed the direction And you can see what's happening there on the weekly CCI for the Dow Jones Industrial Average. Looking at the Ichimoku cloud, you're on the cusp of a mature trend again on the S&P 500. You have to get above 5 and above 80, and we're almost above 5 down there. Of course, your Dow Jones it's got a weak bullish trend. At least it's bullish, but it's weak, and you're above the cloud, though you're below the blue line still, and your rate of change again is on the cusp of going negative again for the Dow Jones. So in your right around the pink shading, we should be, when you're bullish, you should be bullish. You should be above the cloud by the time it turns pink. Remember, the pink shading represents the pullback plotted 26 days forward. So you generally, if you're just having a pullback, you should be back above the cloud by the time you get to the pink shading 26 days later. And you should definitely be above the cloud by the time you get to the green shading, which means that you've bounced, right? And that means you're continuing to bounce. And so, again, it's kind of threatening whether we'll be able to get that, be that bullish or not. Let's take a look now at the Bollinger Bands and the Keltner Channel. You'll notice the bandwidth is really low on the S&P over there on the bottom left, really, really low. We are above the upper band, and we are right there at the upper Keltner Channel. The momentum still continues to drop. We're just barely below that upper Keltner Channel there. So the momentum is barely dropping. You have the red dots, so the bands are inside the Keltner channels. Again, looking at the diamonds, we are in the lower half of the bandwidth. The bandwidth is actually pretty strong, again, right at the point of control there. And the momentum has been pretty negative. And the band still easily outside the Keltner channel. So a much different story on your Dow Jones Industrial Average. Again, does not have NVIDIA in it, which is why it's showing a different picture, even though it's got Apple, and it's price weighted, so Apple's not going to have as big of an impact on the Dow as it does on the S&P, being the biggest market cap weighted stock in a market cap weighted index. So let's take a look at the intraday moves here. You can see, remember, we did get a new high today, and just slightly higher than last week's high point. We are trading right around the 4-week range. The low is now moved there, so we did move up on the negative Arun indicator. So that's where the low is. It's dropping back down. You can see the green line is still right at 100. And that's going to be like, we're going to, the range is pretty low. In fact, the range is actually really low. And again, it won't move up unless we get new highs, because we're not going to get a new low anytime soon. If you look at the stochastic, this chart's another way to visualize it. I mean, we're right there. That's how close we closed to the 100th percentile, to the high of not only today, but the high of the last 4 weeks. Of course, your Dow Jones shows a different picture. Here, the Dow Jones Industrial Average is still in bearish territory, back below 40, and still below its falling moving average. So, much different picture for your Dow Jones. We continue to see a much more, I wouldn't say bearish, but definitely a lot less bullish of a picture on your Dow Jones than what we're seeing on. In fact, you're getting lower highs and lower lows, and we barely closed above yesterday's high point. So it's a bearish candle, though not as bearish, because we barely closed above yesterday's low there. Obviously, when you look at today's volume, you saw the range was barely above average. The volume continues to be really low, really, really low. So when you look at the context here, you can see that the average for SPY continues to be extremely light down there. Whenever I draw the line here, I had a line on it, but if you draw that line down, again, we're right around that 47 million shares or so. If I zoom out, you can see we are rarely this low, right? Rarely are we this low in the absolute number. Now, remember, it's a price-weighted average, so it's naturally going to get lower as the price of the ETF gets bigger, because the amount of money that goes in a day after day. So that's why we kind of look at the money flow, which normalizes the volume. Still at bullish levels, and it still has a divergence forming. And again, we're still, we still haven't produced a new 52-week high in the money flow index, even though the price at 514.81 is when we reached that level on money flow. We're at 537 now. So we're at 23 points higher, and the money flow still hasn't crossed, which again, this goes to show how bullish this move has been to get to this level, and how little volume we've had to support that move. Let's take a look at the volatility index, which has been an important component of this move as well. Volatility is low. It's not extreme. It was extreme on Friday. Bounced back up it was extreme. Yeah, last Friday was extreme, but it's bounced back up the first 2 days of this week. Your VVIX is still extremely low itself, below 80. That's an extreme level for it. And you can see the correlation has jumped back up, and now it's just a matter of how much longer it's been below. The VVIX has been below 80 for quite a while here. Remember, that's an extreme level for the index when it's below red, and it was above red for most of the day until the end of the day. But you can see how much it's been below that red line. It's not common. Usually we get below the red line, we pop, right? And remember the VIX, if I were to put the VIX on as the comparison level here, as the VVIX bounces, the purple line is the VIX. So you can see the VIX bounces up too. So anytime you're extreme like this, we tend to bounce back up. And we were extreme just a week ago. Yesterday we were down to 75 again. It's barely above that level, which is really extreme. And we bounce back up, and we'll see if that means the VIX is going to end up bouncing back up, because remember, the VIX itself relative to its own average values is still pretty darn low. You can see, and we've been basing for a while, and just like we're kind of basing over here for a while, and we didn't really spike up. We trended higher, but we didn't really spike up in volatility until the end of March, middle of April there. So we'll see if we end up forming a low point. I believe we're forming a low point again here on the VIX, just because it's, again, there's not much downside to it, and there's unlimited upside, because the VIX just doesn't go very much lower than this, generally speaking, especially with the presidential election, especially how contested that presidential election is coming up here later this year. It's going to be very difficult for the volatility to remain this low with such an uncertainty event that we have to look forward to. All right, now let's go ahead and take a look at what's driving this price action here. And you can see the Qs are really killing it over the last 3 months now. They, after 3 months here of gold being the best performer, commodities being up there, now it's the Qs that have been the best performer over the past 3 months after this pullback and the subsequent bounce. Of course, IWM is still negative over that period, and SPY has been following along the Qs, commodities and the dollar. So you have dollar and yields both up here over the past 3 months, and commodities. So you had your three-headed monster that's really only hurting IWM right now, and the Dow more so than the Qs. The Qs were able to offset the three-headed monster. If I take a look at just what's going on here today, you'll notice that bonds were up today, and gold was up, and not gold, the Qs were up. Gold was up too, but the Qs were up, and that's really the only outliers to the upside. International stocks are big outliers to the downside. So let's take a look here. 1 second here. Let's take a look at how those are doing. So we'll pull up the regular 3 green arrow chart here and take a look at EFA. And look at that big drop. I mean, that's a big drop in EFA today. Dropping down pretty significant, dropping below the 50-day moving average. Big, obviously it gaps down a lot, or gaps up and down a lot because it's international. MACD is still positive, but barely, and your stochastics dropping below the moving average. And then EEM also flirting with dropping below its 50 days. MACD is already negative, has been negative for a while, as we've been below that 17-day moving average for quite a while, and your stochastics is in bearish territory. So those two, and it's, there's been some strength in the dollar. That's not dramatic strength. Obviously, we're not to new highs, but it is some strength in the dollar, and that's going to put some pressure. But nothing today that would warrant, that big drop in EFA, especially EFA. But remember that for the stock market, a stronger dollar is not necessarily the best sign, unless you're, these mega cap names, right? If you look at the TNX here, and see, I'll have to do TNX CGI and see if it's updated. It's actually not updated there. So But let's take a look at TLT. I don't know why they don't do that, but look at TLT here, and you can see it's rebounding. Now, again, remember when this rebounds, yields fall, and yields rising is what puts pressure on equities. So you'd want bonds to fall here, and you notice that we are kind of stuck pretty much in between all these moving averages, between the long-term moving average, short-term moving averages, both trading inside of today's range. Intermediate term moving averages there with the 30 and 50-day moving average. So it's you've clearly got we don't really have a trend one way or the other. And if it does go up, remember you got that big point of control sitting right on top of it. So there's a lot more resistance to long-term bonds right now than there is support. So again, that means that the path of least resistance is to the downside for long-term bonds, even with today's little rally up here to the upside. And of course, the other head on that three-headed monster is commodities. Commodities had broken down a couple weeks ago, have rebounded over the past week, but still hasn't climbed back above like the 17-day yet. Barely above the 8-day yesterday and kind of flirting around with it today. But nothing too significant. Crude oil being a big driver of that as it's rebounded back close to 80 over the past week, and that's what's brought DBC up. And you can see crude oil would have to break through its own resistance levels, getting through the point of control up to the upside. So that's what's going on with most of those. If you look at the sector rotation, here, let's pull up the sector comparison chart and just look at today alone. So we'll go to June. You can see XLU has been the biggest winner with technology kind of starting to move up with communication services, but it was all technology today. Technology is by far your biggest winner. XLF is your big loser on the day. Here, give me 1 second. Here, I'm going to take a look at the relative rotation graph, and you can see XLK had been dropping, turned up slightly today, but had been still got strong relative strength, but had been weakening with weakness in momentum. If you take a look at the energy, the XLK here, there's energy, and energy's been lagging behind. But XLK had been outperforming. Look at that big breakout move today, way up above its 50-day moving average, and it's got the negative momentum, which is what's been bringing down, brought it down into the yellow. But look at what's moving higher. You have staples, you have real estate, you have healthcare. Again, all traditionally safety trades. Communication or consumer discretionary is not necessarily a safety trade, and then energy, which has been correlated mostly with those safety sectors. On in the bottom left, in the lagging, you have these cyclical areas: materials, industrials, financials, that aren't necessarily the big names XLK, XLY, XLC, but they are also very cyclical areas of the market that tend to do better when there's positive economic growth expectations. And utilities, had been such a big winner for such a long time, is now kind of moved into the lagging category. This is what XLU. Remember, XLU was such a big winner. It had gone parabolic here. Now it's below its 17-day moving average and dropping. Remember, this does well when yields fall. And in terms of intermarket relationships, it was doing well just because of the AI, demand for electricity that kind of pushed utilities higher. But just in general, it does well when utilities fall. Yields fall. If yields start to rise again, and then that would put a lot of pressure on a sector that's no matter how safety traded is, it would put a lot of pressure on a very overbought, parabolic move. Here is the ratio of the Qs to IWM. Again, blowing past all-time highs. Every day has been all-time high, but blowing past all-time highs. The RSI up at very, very high levels. The PPO is up at very, very high levels, kind of matching some of these other big, strong moves and peaks that we've seen in these. You can see the long-term PPO is rising, the CCI and the DMI up at very high levels too. So very, very strong move for this ratio chart. And again, you don't really see this reflecting in strong breadth. The breadth is still really weak. We're below 50% mark on the number of stocks above the 50-day moving average, and our new highs and new lows index is negative. still for multiple days in a row. Hasn't broken out, but it's been negative for multiple days in a row. And if you look at, like the McClellan oscillator here, it's also negative. It's been, below the minus 35, minus 40.8. We kind of look at the number of stocks that are showing new highs on the S&P and the New York Stock Exchange. Here we go, in the New York Stock Exchange, and you can see 57, not quite meeting the number, 63 here, not quite meeting the number that you need to see. I think it's like 72 that we need to see. It'd be 2.5% of 28.86, and I think it's about 73, 72. So we're not quite getting the Hindenburg omen that's been talked about in the past, but still bad breadth nonetheless, right? Really, really poor breadth for the last few weeks, despite the fact that we've been so bullish, and then the summation index continues to follow down. So you can see again the red flags that are there, again just basically showing up in such a narrow move, with the Qs is dominating the relationship here. The Q is dominating that move, and the skew, you can see pushing the skew, keeping the skew, still above the 140 level, below its average, and the average just continues to rise, but still above, not extremely highs, that's 150, but pretty strong highs. 140 is a pretty strong level for itself for the skew, and we're still above that over the past week or so. All right, for our trade idea of the day, I want to take a look at Apple. Obviously, there's a big driver of the day today, up 7% for the largest company in the S&P 500. Well, the second largest now, I think the second largest company in the S&P 500. Nvidia and Apple have been kind of going back and forth, but 10% above its moving average, which is the highest it's been in the past year. You can see the 100% mark, not the highest of the past 2 years. It was when it first started that bullish move over there, off of earnings, no less. It got up pretty high and started a bullish trend. Then over here, it kind of, we were already kind of bullish for a while and got up to this mark, and that kind of ended up being the peak right before we had the end of 2022 pullback. So needless to say, one of the biggest moves to the upside for Apple that we've seen in quite a while. If you take a look here, again, the biggest move, as you see there, in the past year. So it'd be the biggest move on Apple since November 10th of 2022. Again, coming off of that correction low point from October of 2022. But still, regardless, one of your bigger moves that we've had. You can see COVID, and then coming off of that in July there, we had a pretty decent sized move relatively to this same level. Same thing in early 2022. Incidentally, when we started the correction, we had this big of a move. So big time move to the upside. When you look at, so not surprisingly, we're going to see a lot of bullish charts here on across these different indicators. When you look at its market forecast, you got a strong bullish posture there. When you look at its weekly chart, you got a strong bullish candle here closing above a bunch of highs. So the Hagenyashi close is closing above all those highs. It's even more bullish than normal. You obviously have 3 green arrows. You have a pretty decent, we were kind of in convergence mode for a while, but we have 3 green arrows now, and you've got strong volume the past 2 days coming off of that AI announcement, or their WWDC. When you look at the 2-line versions of these charts, we are blowing through the value area for Apple. In fact, we kind of moved the value area earlier today when I did the Market Outlook Live. The value area was actually a little bit higher, but we got so much volume up here now that's kind of moved it down, and you can see we're getting way up above these averages as average values. And you look at some of these other oscillators like the DMI. You can see a good bullish pattern here, back above 35, back above its ADX. The negative indicator dropping there. Looking at the RSI and the CCI, you can see a big, strong, extreme level on there, big, strong level on the CCI too. So very strong patterns, strong bullish patterns on all of those. Looking at the Ichimoku cloud, You have a mature trend now. Well, very mature trend, very strong rate of change over the last 26 days. And then you are clearly going to be above both the Bollinger Bands and its Keltner channels here, way up above the bands. The highest above the bands has been in a while. The bandwidth was really low when we broke out here. And then you can see the Keltner channel is way up above that Keltner channel. So what we decided to do was to do a bull put spread. Again, I did this during the Market Outlook Live. And I actually did a little earlier today than normal. In fact, when I did this trade, the delta, we got into this bull put spread, the delta was at 31. Now it's at 17. In fact, we're almost up 50% already by the end of the day today. So really good move on Apple. Generally speaking, we close these out so I can free up that $1,000 of risk. I can free it up for a maximum gain somewhere else. July has got 38 days left. So if I can get the 50% of maximum gain or better in the next day or two, and that's, again, 348, so we're looking about, what, 174? And we're at 155 right now, or roughly 155. Where are we at for Apple? We are at 160. So if we get to 174 in the next day or two, then we can, close this trade and position ourselves for a full maximum. Instead of waiting for the other 50% of this maximum gain, we can try to get a full maximum gain somewhere else for that same amount of risk. That's kind of the idea behind that, when we can take advantage of a quick move. And so far, so good, right? So far, so good on this trade today. All right, well, that does it for today. You've heard from me now. Now I want to hear from you. Use that link popping out in the top right corner of your screen. That takes you to our Market Outlook forum. Open up any new thread with any questions or comments you have. Reply to anybody else's thread, and let's keep this conversation going in between videos. Again, thank you very much for watching. Remember to subscribe to our YouTube channel. Hit that thumbs up icon. Comment on the video. Join us at marketscholars.com for free. Follow and like us on Twitter and Facebook as well. Have a great rest of your Tuesday night, everybody. Tuesday night. And we'll see you all next time.